Good afternoon, traders. It's Bill Baruch with Blue Line Futures and your daily Midday Market Minute. We got CPI and we got some volatility, but before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Yes, CPI came in overall right in line with expectations, but there's some really good highlights here. The headline number, an increase of 10 basis points month over month. You also have the year-over-year increase of 5.0%. Both of these a touch below these expectations, but overall it's broadly in line. The nice thing is we're starting to see some of these components like shelter, like services X shelter start to come in, and services X shelter actually disinflated by 3 basis points. And then you look at the shelter in general, it's trending lower relative to 3-month, 6-month trends. There's some good little components here to take away, but just as we heard from some of these Fed members talking shortly after CPI, there's still work to do. This is one number. It's really two numbers, but we got PPI now coming out tomorrow. So you got the February CPI, which was encouraging. Now the March CPI is encouraging. You know what? When we look into April and 3 is a trend. Yes, energy has risen pretty sharply here in the last 2 weeks. That's going to be factored in, but the markets, given how efficient these models are already factoring it in. And also, April's CPI from the Cleveland Fed inflation nowcast is already showing upwards towards a 60 basis point increase month over month. And even despite that increase month over month, the April year-over-year number is still at 5.2 to 5.3%, and that's due to the higher base comparisons. And these higher base comparisons are going to do the Fed's work for them. I've talked about it here. March of 2022, when Russia invaded Ukraine, that was a 1.2% month-over-month jump, and inflation, the hottest inflation jump going back to 2005. Only June of last year at 1.4%. Would beat that out. And so you have this pocket of time between March and June where these base comparisons in 2022, they've accelerated. So I think that's going to arbitrarily help bring down inflation, plus a little bit of a slowing economy. I don't know how much the economy is slowing, but quite yet, but it likely will. Credit tightening up, lending tightening up, etc., due to the regional banking crisis. But I think today's encouraging numbers. However, the market didn't treat it so well. We're starting to see a little bit of a bounce back. The S&P traded to a high of 41.77. That's major 3-star resistance. The levels are there. The levels worked. 13,300 is major 3-star resistance. And the NASDAQ didn't quite get there. Sticky area, about 13.2 and a quarter. The market's reversed after the opening bell. And really, 41.21 as a move in, and the S&P sort of just barely touched that level. 41.26, 41.30 was the battle. That was support. And the NASDAQ pinged rare major 4-star support, a level it's hit, 4 out of the last 5 sessions or so. And that level is rare major 4-star support, 12,980 to 13,000. Having closed it below there, market continues to respond from there. Though tech is lagging, we're seeing some other components like the industrials, some of the discretionary, etc., are performing a bit better here on this rebound intraday. Energy is also moving very well, and that's also not all the EIA report today. Obviously, the dollar is sharply lower. The dollar index down 70 points on the sessions, helping lift currencies against the U.S. dollar. But the EIA inventory data really just, let's call it in line with expectations, though. Exports dropped off significantly from week over week. That really starts to highlight maybe the demand, still remaining buoyant, but the exports probably factored in, the drop in exports factored into the report. So why is crude really above 83? Because maybe demand is buoyant. We're heading to this seasonally bullish time of year. Inflation's cooling. The dollar's lower. But there's also news. China is heating up. I mean, we've been talking about this for a few weeks now. The reopening that took place, that was a headline reopening at the turn of the year. That was all that it was a headline reopening. It did light a little bit of a fire under things like copper, helping get it out of the gutter. But the real reopening, the general public finally coming out in reliving their lives after 3 years of lockdowns, getting construction going. New loans data this week. I highlighted that in the Morning Express. New loans data, second highest on record next to January. Those are record levels of loan giving. So you're seeing a very supportive CCP, and that's going to bring this growth impulse. We're seeing upbeat conversation, upbeat data on construction, record Urals imports in March. So you're going to start to see this really underpinned. Crude oil, we're out above $83. That's been the ceiling. So at what point, I guess the question would be, does a rise in crude oil start to get the inflation conversation going. So that's going to be a headwind potentially. But for now, a lot of news. You got the Caspian Sea shutdowns, 1% of global oil there today. That was also helping the market move. So there's a lot of just different minor tailwinds helping crude oil. At the end of the day, though, it was a very, very healthy consolidation after that rip higher last Monday. Never even sold off. 79.5, 79.80. That was a major 3-star support. That held, and now we're really arguably breaking out here in crude oil. So the weekly settlement's going to be crucial, but here's a big move. And then moving on to the metals, disappointing for gold. 2043, but guess what? That is major 3-star resistance. Same way that the S&P traded up to 4077 resistance. After the number, gold did that too. Gold reversed sharply. 2015 was the low. Consolidating. Silver got up to 2582. We got some resistance as you get closer to 26, as well as 2570. Those have come in. I think here the dollar weaker, and it could help a little bit of excitement overnight. We did see gold and silver trade fairly well around 8, 9 o'clock p.m. Central Time last night. Maybe we can get that again. You don't want to see it really start surrendering yesterday's improvement in gold, though. That would be very disappointing, especially leaving a tail on today's session that would end up being on the week. But you know what is a bright spot is copper. I mean, same thing with the China story, talking about crude oil breaking out. You got copper out above the 50-day moving average today, trading to 408.5, above 408.5 right now. We've been talking about copper. We've been bullish copper. I'm long copper in our metals fund, Metals Alpha that we launched to start the week, among copper as well, and the Global Opportunities CTA fund. If you want any questions about those, don't hesitate to reach out. Just email us, info@bluelinefutures.com. We're here to help, though. If you're trading, call our trade desk. Our team is always here to help. 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.